Welcome everyone to today's program hosted by the ISM New Jersey chapter. In honor of Veterans Day, we would like to take this opportunity to thank all of our veterans for their service and their sacrifice to our great nation. Just a few housekeeping notes. Please make sure if you have a question, use the Q&A tab or the chat function, and we will try to get to all of your questions, but we do encourage you, please ask questions to this esteemed panel. Today's program will be a panel discussion on the real estate landscape post-COVID-19. We have so much to discuss, so let's get started. I would first like to introduce Karen J. Martinez, CEO and President of Bravo Group Services, who has been a past speaker and a sponsor for the ISM New Jersey chapter. At this point, I would like to turn over the program to Karen, who will be moderating this discussion.
Thank you, Kathy. Good day, everyone. Happy Veterans Day. So when we start, during our introduction for every one of our pristine members here, we're going to ask when you're called upon your question that you provide a brief introduction of yourself and your current role. So let's kick it off. Dana, what does the future of the commercial real estate post-COVID look like for you?
All right, I'll start off. I'm Dana Getz. I'm with JLL. I'm the director of our New Jersey office property management practice, which is part of our overall tri-state region. I have more than 24 years of experience in professional real estate, most of which have been with JLL. Went to Rutgers University. I have a bachelor's degree in communications. I'm a lead green associate. And I'm the current president of BOMA, New Jersey, an organization that represents owners, managers, and property professionals in all types of commercial building types: office, medical, corporate, mixed use, and industrial. Personally, I'm a very big supporter of Special Olympics, Tackle Kids Cancer, the American Heart Association, and the American Cancer Society. There's a lot of need out there, so.
Wow. Thank you for taking the time today. You're a busy lady.
Sorry about all of that.
That's good.
So what do I see the future of real estate post-COVID? I do think that everybody is looking forward to getting back to fully occupying buildings. They're not empty, they're just lightly occupied right now. And as a working parent, I can't wait to be fully back. I'm partially back now. I'm hoping that my dog doesn't come charging in or my son doesn't come charging in while I'm on this call. But I do think that there have been some changes that are gonna be for the good once we return. It's nice to be able to have some flexibility to work at home, and that's for employers to kind of figure that out. But to get back, I think people are gonna wanna be back because there is something a little lacking, not even a little lacking, a lot lacking with the culture of organizations and the sense of collaboration. Well, we figured out a means to do it on the fly and kind of everybody up their technology game. There's a need for a sense of belonging and that culture that you get at a workplace. So I do think while this has been a hugely pivotal event, we will get back to an adjusted normal. I think there's some changes that are gonna stay. Their focus on health and wellness in an office building is gonna be so important. So their employers can provide that to their employees, that they feel safe going into the buildings. Tenants are so much more aware of what's going on as far as building procedures and systems. We've had so many collaborative discussions with entire office buildings, all the tenants, and we're all kind of learning how to handle things as things have been going. But I think everybody's going to be happy to go back. There's going to be a focus on health and wellness, and I think the buildings that provide those upgrades and that sense are going to be the buildings that are easily leased because and I think that's going to be a differentiator. If I was an employer and I was choosing where to lease space, I would want to go where, that I know the upgrades are there. And I do think that there are going to be some future design tweaks. While I don't know that I haven't seen it in action, I've seen some sketches from, I think it was Gensler, that changed the design of restrooms, going from a stall environment to a fully occupied single partitioned area. So I think, but I do think that people are going to welcome going back into the office and enjoy having some flexibility to work from home when they can.
Yeah, and thank you, Dana. And it's unfortunate the commercial market has been probably the most affected by the pandemic. John Morris, if you could maybe shed some light on the industrial side and what you're seeing there post-COVID, and currently industrial seems to be really doing well. If you could shed some light on that and also add the retail component on.
Yeah, for sure, Karen. Thanks. Can you hear me all right?
Yes, perfect.
Great. Greetings to ISM and thanks for having me. So first thing I would say is we're not post-COVID yet, although I think we see the light at the end of the tunnel, hopefully not a train. I would say what COVID has shown about industrial is, like many things happening during COVID, trends that were accelerated. It's been true here recently that industrial real estate growth has no longer aligned with GDP growth. And those two trend lines rode with each other for decades. They no longer do. And industrial's been outperforming the economy, if you will, and never seen that dramatically than it has been here in the last few quarters. So our forecast was revised end of Q1 to be more inclusive of the impact of e-com on industrial. Our industrial forecast, we still missed it. Nobody expected, I don't think, this kind of strength for the industrial market. The business is ahead of last year. Rents are now back at pre-COVID levels, cap rates below pre-COVID levels. It's some days hard to believe. The big box segment is doing better than others. The smaller, really small segments are actually doing well also, where people are focused on their homes and on construction and home improvement. That business has benefited local trades. The mid-sized businesses that are maybe one or two markets, maybe in the past have been needing 75, 100,000 feet, those are doing okay. And in secondary markets, that business is starting to recover, I think, again, as people see an end to this. But it's certainly true that e-commerce's growth, which had been stable for the 10 years prior, growing at 15 or so % a year, grew at 35% in one quarter this year, and will probably grow 40% this holiday season compared to last. So there's going to be a second surge here in e-commerce growth. Amazon has leased 60 million feet of new space this year. That's about 18% of the big box market. So as the leading indicator of what's happening with e-com, their business is strong, but so is Target, so is Walmart, so is Home Depot. Other key players now may be growing even faster. So Karen, it's been a interestingly good year for industrial. I don't feel good about it because other categories doing poorly. So there's not a net positive story for commercial real estate for sure. And retail is doing okay. And I would say, retail's business on average is probably down by a third. Not sure exactly what that looks like at JLL, but the businesses, it's been off. Some categories have struggled. Closures have been regional. They've been a little bit sort of irrational in their design. I think we all, whatever are your politics, agree that there's not consistency. So once we get through that more well-defined, I think retail will recover even better. The activity levels amongst clients are getting better. So I think retail coming into Q1 maybe has another tough beginning to the quarter. I think some of the negotiated abatements and deferrals maybe expire. Maybe they're expiring now. Maybe we've got a tough tranche ahead of us for retail, but I think there's much optimism for retail in Q2, Q3 of next year. So it's been an okay year. People have been busy, but not necessarily as productive. And certainly e-commerce has benefited. So there's been a couple, silver linings in a pretty dark and decade-long year, it feels like.
Great. Thank you, John.
Mm-hmm.
I'm sorry, did you get an opportunity to introduce yourself?
No, boy.
We can hear a little bit about you.
It's probably better if I do. John Morris at CBRE, been in supply chain for decades and now lead our industrial business and our retail business here at the Big Green. And thanks for having me.
Awesome. Great. Thank you, John. Ryan Severino, if we could, from your stance, do you feel with the additional social distance required in office space that there will be a positive or negative impact on square footage? Ryan Severino, if you could take that for us.
Sure. So hi, everybody. I'm Ryan Severino. If you don't know me, I'm the chief economist at JLL, which usually means my job is to lie convincingly, but I promise I will tell you the truth on the webinar today. Really what my job is I am responsible for forecasting the overall economy and then thinking discreetly about the implications for commercial real estate, not just sticking my finger in the air and saying, oh, the economy is going up or down and rents are doing this, but actually quantifying it, which is a really great job for me because I am a self-avowed mathematics geek, and that's really what it boils down to. It's a lot of using mathematical modeling to interpret what's going on in the world, figure out the discrete implications for commercial real estate, and then explain it to people in a way that doesn't sound like I'm an economist or a mathematician as best I possibly can. And I've been in commercial real estate longer than I usually admit. But hopefully my sometimes adolescent nature sort of belies how long I've actually spent in this business, which goes back more than a couple of decades. As far as the question goes, I genuinely feel it's going to be a positive. And I think that's going to be true irrespective of whatever happens with people going back to the office. And I can't definitively tell you I know exactly what's going to happen with that. But I do think social distancing is going to be a boon for the office sector. And I say that because we have just gone through a period over the last, let's say, 2 to 2.5-ish decades where we went through a densification craze in the US, but especially in expensive markets like in the New York City area. And it was, to use an analogy that's been abused in 2020, it's been the frog boiling analogy, where that densification didn't occur dramatically. It occurred gradually over time, and people didn't really have a very negative response to it at first. It started to get a little bit smaller and a little bit smaller, and people just sort of adjusted to it. And then once we went down the road of 20-something years, people looked back and they went from having a reasonable size office or a cubicle to the equivalent of sitting at a cafeteria-style table with somebody else, almost within arm's reach. And a lot of the backlash, to the extent there was backlash to that up to this point, was more along the lines of things like, I don't feel comfortable being here. My job title necessitates that I have a more prominent workspace, ego sort of related things, something along those lines. What this crisis has really opened everyone's eyes to is that proximity to other people is a significant health concern. And this is one of the reasons why, even before this, I was not the biggest proponent of open plan offices. And I'm on record in multiple places as having been against that, is because the research showed, among other things, that it's easier for people to get ill when they are confined into smaller and smaller spaces, denser spaces together, especially when you don't have dedicated workstations, you're doing hot desking and things like that. I mention that because the difference to me is that prior to this, if there was any blowback against it, it was more sort of that ego-oriented blowback. I think now the majority of people, especially higher value service sector workers who utilize office space, are going to be more acutely aware of the risks to being in too close proximity to other people. And I think businesses that are still, even in a market like this, in a competition for qualified people, which based on demographics will only intensify over time, are not going to be able to play that game. If people have legitimate health concerns, which I think they rightfully do, and they're more aware of them, they're probably going to be more vocal against being crammed into smaller and smaller spaces. And I think companies that don't want to just pay lip service to that actually want to take care of their employees and keep them relatively safe, they will respond accordingly. So my thought on this is, irrespective of whether or not everybody comes back into an office 5 days a week, some people work from home permanently, we get some combination of people who telecommute and go into the office a few days. I think controlling for all of that this will probably result in, at least at the margin, some de-densification, which, all other things equal, is a very economist thing for me to say, is a net positive for demand for office space.
Very good. Thank you very much, Ryan. Very interesting highlights there. Professor Lyons, welcome.
Thank you. So Kevin Lyons, I'm on the faculty at Rutgers University in our supply chain management department. Previous to that, I was the chief procurement officer at the university as well. So I went from the administrative side to the faculty side in 2011. And so, I'm sorry, go ahead. I was just going to.
Well, first of all, we must congratulate, you have an anniversary that Rutgers celebrated, 254 years anniversaries celebrated yesterday. So congratulations. Yes. Congratulations.
Thank you. Thank you very much. Appreciate it.
So Professor Lyons, how effective has your continuity plans played out, and how have they not? What has changed?
Yeah, so the interesting thing about the business continuity plans, not only for Rutgers, for everyone else, is that this is probably the first time, I think, in all the studies that I've done on these, where every type of continuity disruption has happened all at once. So when you look at people being disrupted, so those are your employees and your customers, the operational plans, so how you effectively run your businesses, disrupted. The political landscape generally is something that we look at when we think about our business continuity plans. Any changes in political issues sometimes and most times actually impacts your business. Disruptions to the supply chain, up and down and across every single part of the supply chain. And I don't think there was any particular commodity that was not impacted by this past year. And then this disaster part, which is usually, natural disasters come, you have a disruption, you take care of it, and then your business continuity, if it's, solid, then you're back up and you're running effectively. And then communications were also disrupted. So what I'm getting at is that everything in the plan, if you had such a plan that covered all of those different pieces and parts, then you probably did okay, which I don't think anyone had a continuity plan, including the university, that covered every single one of those pieces and the duration of how long it lasted as well. Because when we think about disruptions, it's generally something that's a one hit, and then you recover if your plan is solid, and then you come back with a revised plan and you move on. But this one is actually still going. It actually is being revised almost on a daily basis. So we have, as a university, also, scaled back on our operations. Our buildings are sitting idle. We still, maintain them and, clean them and get them prepared for the eventual return of operations. But they are an asset that basically is just sitting there. And now we're really starting to think about, do we need to have all this property and the assets when we do start to repopulate our campuses? So that's something that's ongoing as we speak.
Yeah, interesting times, that's for sure, and evolving. Dana, can you share how your business continuity plans have evolved on the commercial side?
Sure. So there's two different tracks that I am part of. There's the JLL as a service provider tract that we have to figure out how we're going to service our clients and react quickly to have alternate means to pay invoices and just be present at home for people. And then we also have the property aspect. So you have teams at properties, which are their own little P&L, and having to figure out the continuity at a property. And property management is always very nimble, and we're very experienced at dealing with whatever comes. That's what we do. We have emergency plans, and I think this has stretched everybody's continuity plan. And you know, we're fortunate that as an organization, we were able to service our clients and then also help our property teams deal with it. And it's just been a lot of kind of audibles, because like Kevin said, we're still in it, and we're, there's the end is kind of in sight, but I don't know if it's imminent. So, you're dealing with COVID fatigue of your teams as well. But I think we've been able to pivot and provide the service at both a corporate level and at as far as our property teams.
Good, thank you. So what blind spots have we uncovered? Lessons learned? Anyone, this is open to the panel. What could we be looking for differently right now? Where's that silver lining? What are you experiencing?
I'm looking forward to manufacturing in America, so we're not at the mercy of overseas. I mean, a global economy is great, but to be able to have the ability to produce goods here and have access to it when we need it, I think that is the silver lining that I think will come out of it.
Hey, Dana, this is John. I agree in part with that. I think you're right. I think this sort of supply crisis that was talked about creates more regional manufacturing, which is good for jobs and GDP here. We are sometimes referring to it as a China plus one strategy, meaning for some manufacturers, maybe not leaving capacity in China and taking it somewhere else, but maybe there's a more diversified strategy that includes Mexico, the Southeast US, the Midwest, for sure. And maybe the China part of it moves to Vietnam, where the labor arbitrage is still, pretty significant between the costs here. But there is, of course, in net, a cost impact on that for all of us, which that's a trade-off. But I think you're right. There is some more diversification geographically of production. And that's a good thing.
Absolutely.
I totally agree as well. This has actually allowed us up in Newark to actually accelerate legislation on our land bank opportunities. So we now have areas of the city that property that has been sitting and dormant for many, many years. We took this opportunity to pass legislation to make that available for production and for housing as well. So land bank legislation had been sort of sitting around for a while. And so now it just went through quickly. And now we've got major plans to work with the public and private sector to actually start to populate that space. So we can take advantage of what Dana is talking about, the opportunities for potential localizing our supply chains, especially in the critical areas.
Great news. Love hearing that. Very positive. Ryan, blind spots, lessons learned?
I think from my point of view, the one blind spot, and I think maybe it's good if there are any silver linings to come out of this, is that we realize this sooner than later, is that we are never going to be able to really predict exogenous shocks like this. And we started to get, we are progressing along this road where increasingly the world is utilizing things like machine learning and automation and artificial intelligence. They're never going to be able to predict those things either. And my concern going into this was, as great as those things are, and as much as I utilize them for what I do, they're not perfect crystal balls. And I think what this shows me is that, and this is the approach that I've been taking, I've always taken this, but more prominently now in how I think about the world, is that I think it's better, rather than to come up with one forecast and hang your hat on this, like, this is my forecast. You might have read about it in the Bible. It's amazing. It's more prudent to have different forecasts for potential outcomes, and then think about what you would do if those forecasts actually come into existence, rather than only having one forecast and relying on that. And my best example of that is, think about a weather forecast. And I'm not trying to throw meteorologists under the bus, because I get how complex those systems are, but we often only get one weather forecast. And if the reality deviates from that in a significant basis, it can be problematic. There was an instance, I don't know, a couple of weeks ago, maybe it was even last week, where I checked the forecast to take my older daughter to her soccer game, and it says it wasn't going to rain. It was a 0% chance. And then it poured the entire game. And so, of course, I didn't have an umbrella. Like, thankfully, I had a hooded sweatshirt with me. But that's what I mean by that. In so many instances of life, we've gotten used to having just one forecast and relying on it canonically. And I feel like that was getting probably worse with the advent of machine learning and artificial intelligence. I think events like this remind us that we shouldn't hang our hats on any one forecast for the world, no matter what it is we're talking about, no matter what the methodology is. We should think through different scenarios and different ranges of outcomes, and then prepare for all of those eventualities. And I don't think we were doing that before this very well.
It's a great analogy, and thank you for sharing and having us look differently at that. It's how we can continue to pivot and stay nimble. So great insight on that. Thank you. If we could maybe, staying away from what's been kind of the norm, everybody basically knows we need to put hand sanitizers and, you know, the distance and what we're doing. What is everyone doing to enhance a safe occupant workplace? Pros and cons of worker mobility, if open to all on this question, regarding what things are different besides the normal that everyone seems to be quickly adapting to.
Karen, I would say in industrial that the changes so far are limited. I think awareness of people is sort of next gen downstream for industrial, though. I think valuing the workforce and logistics is something we'll see in the next 5 years. But so far, it's been really fundamental things. There have been some spacing of pick stations and some plastic and some rerouting of, you know, traditional pick software to make sure people don't pass each other in the aisles. Really basic stuff, but it's helpful. And I think now that's sort of going to be the expectation instead of the nice to have. So if you want to be a preferred employer, that's going to be something you're doing going forward. But I think in retail, what I've understood is that most of the passage of the risk, if you will, is in a vestibule kind of space. So I'm expecting how we enter stores to be significantly different when we're all, you know, feeling safe re-entering stores. But I think awareness of impact on people, which is part of what I've very much heard from Ryan, is part of what we'll see next.
Yeah, we had at the university pretty interesting and sophisticated systems to monitor the entire campus. Now, we do have folks that do come in, administrative, and I actually go in to teach from an empty lecture hall. But prior to coming into the campus, you have to go onto the website and indicate what building you're going to be, going to beforehand, and it asks you a series of questions, a couple of medical questions, some verification that you're, okay to be on campus, and then you get a notification that, in a sense, okay, you can come. So that plus, the daily sort of forecast, as Ryan was saying, of what's going on the campus, how many, test positives and such. So it's one of these like dashboard that you're looking at, which before, you got up, you got dressed, and, you went into work. But now it's like, first look at the conditions by which I'm going into, get permission, and then, you you're onto your journey. So it's really interesting that that's now, at least for now, how we're proceeding with coming into our spaces.
How about maintaining the connectivity between the occupants in the buildings? Has that been a challenge for anyone, since we are all wearing masks and the exchange is different? What is everyone doing to maintain that connectivity?
I think a lot of people have pivoted to a different type of community. So an office building is typically a community where you might have events and people gather. So it's turned to a virtual environment. We have an experience management group that is gathering tenants together for wine tastings, and you got to just totally shift it temporarily to how to have wellness training and do everything virtually. And I think employers are doing that too. I think my experience is I got to know my colleagues in the tri-state area so much better because we were having, if not weekly, it could have been more often than that, but we were all on Zoom calls and we saw each other's faces and we were connecting that way. So I think we've pivoted to the technology and made use of it.
Can it ever come back without technology and virtual?
I think it will. I mean, sometimes I just, you miss that human connection where you can not just elbow somebody, but give somebody a hug when it's safe.
Exactly. Very good. I want to definitely make this more of a positive note, talking a lot about lessons learned and what have we learned from the Great Recession and the government and real estate market to help prevent another recession of what's coming down the pike. What can we do to start to pivot and do things differently here? I know earlier we already started to touch on the manufacturing and what we're starting to look like. What else can we continue to do to pivot today, now, so that we don't fall into that next recession?
When I look at the lessons from I'm not so sure it's the Great Recession compared to this one. Maybe it's the not as great as we thought it was recession now that we're going through this. But one of the fundamental lessons I think that we learned from the Great Recession, which I think some people remembered and then have forgotten a little bit, is that for a lot of the last few business cycles, we've increasingly been relying on monetary policy from central banks like the Federal Reserve as the only thing that we can really do to manage the business cycle. And I think, and I say this as a statement of fact, I'm not a political person, so I don't mean this politically, but we've really moved away to a large extent from utilizing fiscal policy because to certain people who are politically motivated, it's become anathema to even consider changing tax policy, changing spending policy. And I think objectively, one of the things that made the last recovery not as strong as it could have been was that the spending package that was implemented by Congress was a lot smaller than independent objective economists like myself said it should have been. And then not long after that, we had forced, because of the way budgets were passed back then and spending was passed, we had forced cutbacks, sort of automatic reductions in government spending. And I say that as, I've been around the block more than a few times at this point. I'm a pretty laissez-faire, free market oriented economist, but I think there is a role for fiscal policy to play. And you saw the benefits of that this year. In the early stages of this, you saw very large spending packages from Washington. And I think there's really good empirical research that backs up that one of the reasons why we've seen a robust snapback in the economy up to this point, conceding that we're still a long way from where we were at the end of 2019, but one of the reasons why the recovery has been objectively stronger than many people thought has been because of fiscal policy, because it supported household spending, because it supported businesses and not having to lay off millions more people than they otherwise did. I was hoping that lesson had been learned a little more prominently, because it seems like we've already forgotten about it a little bit. But I think one of the important lessons is something that I think even my macro 101 students learn when I'm teaching it, is that both of those are important for managing a business cycle. We will never be able to completely prevent recessions outright, but it seems limiting to me to immediately take or diminish one of the two major policy areas that can help us blunt the impact of downturns and actually help us manage upturns even better. And again, we've come to rely on central banks in the United States like superheroes, and they're not that. And I think we have largely reached, we're not exactly at the maximum, but we've come close to reaching the maximum of the efficacy of central bank policy. I think the lesson from this year, coupled with what we learned 10, 11 years ago, is that fiscal policy has a role to play. That doesn't mean that we should be irresponsible. I'm not advocating that. I'm simply saying there's optionality there, and removing that option from the toolkit seems really self-limiting to me, given the contrast in performance we saw from the recovery and from the Great Recession, and then the recovery that we've seen, as daunting as the downturn has been up to this point.
Yeah, Ryan, I agree. And the efficacy of monetary policy has been, damaged through the last two cycles. And you're right. Fiscal policy is the appropriate balancing lever, but we've sort of gotten that as a country. On a much smaller level, I would say that in CRE, I think we're learning that the alignment in the real estate infrastructure of a big company like ours, or JLL or others, or within a big occupier, the shared discipline, call it mixed use from a management perspective, across multiple property types at the same time, and the ability to find those opportunities for overlap and concurrence and leveraging space and capital and infrastructure, whether it be omni-channel, mixed use, residential, whatever that's got to be. I think that has been something we've only talked and dreamed about, but I think that's something that is going to do better to help us fight off some of these capital destruction periods in real estate where space is no longer useful as its sole monolith. So I think mixed use is now a real thing coming out of this.
Very helpful to understand that, with the government stimulus package that have been going on, Ryan, any concerns about companies becoming more reliant on what had just happened in the last 6 months of a stimulus package of how they're preparing to go about business in the future? What are your thoughts around that?
Yeah, so as much as I'm advocating government support right now, I'm doing it with the full knowledge that everything has pros and cons, right? There are positives and benefits to almost everything in the world. And my banging the drum for it in the short term is that we have had just such an impairment to both the supply side and the demand side of the economy that it would not be able to fix itself without that kind of support. But I will also acknowledge the fact that on the negative side of the ledger, that there's a risk that if you come out with spending packages like this, when you're talking about billions, trillions of dollars, the risk that you run, Karen, to your point, is that you might end up, at least for a while, propping up inefficient businesses. Because as awful as recessions are, and I think we would all rather be in an expansion than a recession, one of the things that recessions do very well is that they lay bare the businesses and the industries that are no longer operating efficiency, that are basically riding the coattails of an expansion. And once the tide goes out, you know what they say about people, when the tide goes out, you see how people are swimming. I think it's it's equivalent to that, that there are some businesses that can get away with playing that game for a while, but when a downturn comes, they are ruthless and they are very good at culling things that are inefficient. You get away from that when you are spending trillions of dollars propping up things on a widespread basis. So I want to make sure that I acknowledge that. But I think the risk to not supporting the economy in the short run is greater than the risk of letting some of those inefficiencies linger too much in the long run. So to your question, there might be some businesses who are not making really hard decisions right now, or they hadn't been making hard decisions because they've had some support for the government. That is not going to last ad infinitum. And at some point, if those inefficiencies are not corrected or they can't be corrected, they will self-correct. But in the interim, you might see a drag on productivity growth in the economy if we are supporting companies, industries, individual occupations that maybe it's time for them to not exist any longer. And as ruthless and heartless as that probably sounds, it's not, because what we need to have happen is when they go away, it opens the opportunity for more efficient jobs and businesses and industries to exist. Just think about the last recession. There are jobs and businesses and companies that exist today that didn't exist before the downturn. The downturn was really good at showing people what didn't exist, but what we actually need. That will probably be the case this time around too, with, I don't know, health screenings in buildings or airports or something like that. Again, recessions are really good at showing you what's not working so well, that's been papered over, and what you probably need that's been ignored for a while. And so my hope is that it's more of a net benefit to spend money like that, but I'm not ignorant of the fact that there are some negatives that we probably have to also take as well in the process.
Good point shared there. And I think to pivot on a campus like Rutgers and the amount of acres that is, spread across the state, and the investment of all the campuses, and we have virtual learning now. Dr. Lyons, do you think that this is the new normal, or what can we do to prepare for the long term? Can we bring back students into this incredible real estate throughout the state of New Jersey? What are your thoughts?
Well, I hope it's not the new normal. I think that we would be doing a disservice if we looked at this as being, hey, this is how we're going to be doing higher education in the future. I have really three things that I want to mention, as part of this, this concept. In the new normal, we're actually phrasing it as the new opportunities for us to, think about how we look at if it's a campus, how we look at our people, and our students. I mean, there's going to be a serious, I think, reevaluation of the education and the types of skills that we're providing our students and just the general population at large. So we really need to be focused on how we're going to be investing in people and bringing them along, because as Ryan was saying, there were a lot of folks that, because of the last recession just got, do we really need that anymore? And then, we really weren't thinking about, okay, so if we don't need them for that, what else could we use them for? And so we really now have an opportunity to think about reskilling and upscaling folks' experiences, revisiting what space really is. A building, in the past used to be just a place where you go and, conducted business and or education. But now space is going to be, I think, part of the real ecosystem. Is it a breathing, living thing that makes me feel comfortable and I want to be there, and it's going to enhance the learning environment or the business environment? So I think there's going to be a better attention to the places and the spaces that we occupy. And so architects and engineers and others have a really interesting opportunity to take what's happened and make these places and spaces comfortable and places that people want to go to. And then lastly, my area of supply chain, it's, looking at, if you didn't know anything about supply chain before this last year, I think you got yourself a lesson in what supply chain is when there's a disruption. But this idea of buying local, which is an experiment that we're doing in Newark, where the major institutions are looking at their supply chains and trying to figure out if we can purposefully purchase goods and services from the local economy, and looking at women-owned and minority-owned businesses as part of that, coming back, supplying the university, supplying our large institutions, and then using them as a way to boost the economy and boost people in general. So this hyper focus on people and places, I think, is going to be the new norm, if you want to use that definition.
Are you sharing that information, or can you talk to us about other universities and what they're experiencing in their states? Is that a similar plan as well for them?
Somewhat similar. I think Rutgers is unique. We have a new president that really is focused on this. We have a chancellor up in Newark that was working with me on this prior to this past year. So we're kind of trailblazing in a way. But you'll see some of the Big Ten, who are our peers, trying to adopt some of the same things that we're up to as well. And Georgetown.
Sounds exciting.
Karen, as a Rutgers alumni, I want people to go back and experience the wonder that is Rutgers University, and having this be an entirely virtual environment, you lose the college experience. So that I don't see that being a permanent change. What I do see is an adoption for all types of real estate towards that well building standard, where we were looking at green building. Now the next step is the well building standard, air quality, environmental quality, lighting, outdoor spaces, airflow. All of those things are going to be important.
Absolutely. Getting back to basics, right? What's really important? Measuring dollars or measuring the quality at this point. So great insight there.
Hey, Karen, just
Yes.
to add to that real quick, there's one thing I would say, because in addition to, working for the man, AKA JLL, I teach as an adjunct at NYU and Columbia, and thinking through it as an economist who sort of lives in the quote unquote real world and the academic world. One of the arguments for the longest time, one of the things that people didn't like about education teaching was that, going back to something I was talking about before, this idea of productivity, people railed against the industry a little bit because they never saw productivity growth, that the model was always basically the same as it's been over time. It's a fixed, whether you're talking about from the primary level, secondary level, tertiary level, whatever, it's a pretty constant model, that it's a limited number of students in a classroom with a teacher. And there have been a lot of people who've been talking about ways to try to make that more efficient through technology. And I think, I don't want to speak for anyone else, but myself, having taught class online for the last 3 semesters or so, what I would say is we're realizing that there are really good reasons why that model hasn't changed over time, while it's still a limited number of students in a physical classroom with a teacher, because there are benefits to that. There are things that happen in a classroom that don't happen online, that discussion, side conversations, people asking questions, interactions, in addition to all of the great things that are excellent about being on a physical campus, especially as an undergrad. I think the educational experience itself is not the same. And while it's great for someone in an isolated area that can't get, to engineering class at MIT, I think this is showing why we haven't seen big gains in productivity and education through technology, because the best model is still generally a limited number of students in a physical classroom with a teacher somewhere. And I think this is really demonstrating that very well right now.
Absolutely. Really good point. I hope my children get to experience that, as they're in high school now. So let's see, any questions right now before we have our last and final question? Okay. So John Morris, we've really packed a lot into this last 50 minutes with almost covering every vertical. we probably didn't share on more out what's happening in the suburbs, but how do you see how we will continue to emerge stronger in the short term and long term? What are your thoughts of what's happening at CBRE on
Yeah,
south side?
yeah, for sure. I think in the short term, we'll continue to reimagine and rationalize retail real estate. It's just been true for a while. This is probably opinion, but it seems to be validated that we may have too many retail square feet for each one of us in this country. We probably have 24 or so square feet just from a mall perspective per capita here. When you add in strip malls and other kinds of centers, it's closer to 50. I don't think any of us needs 50 square feet of shopping. So in Canada, it's like 15. And in most Western European countries, it's single digits. So I don't think it's a terrible thing if we reimagine some of that space, do it differently, do it better. And I see that as maybe a silver lining of all of that is the acceleration of that change in a way that's going to be good. I would say longer term, we're going to think differently. I think and hope about last mile, and last mile is the biggest phrase in industrial right now. You put last mile on any kind of offering package, and it just gets a better bid because it has the two words in it, last mile. I think urbanization's been going backwards in this country for a little while now. Again, COVID appears to have accelerated that. New York, LA, Chicago, San Francisco actually getting smaller over the last couple of years. The urban center is probably not as close to the middle as we used to think of it as. So last mile in a place like Chicago doesn't have to be as close to downtown Chicago anymore. That to me is, there's pros and cons to that, but that's some alleviation of cost. It costs so much from a logistics perspective to support the last mile concept. It's making it very challenging for retail to be profitable. And I see that structural change happening over the next 5 years. We're all going to get better at it. We'll probably learn how to be better shoppers as well. There should be a price value metric that's more involved in pricing than it has been today. So I think as part of the growth of online fulfillment, there's going to be a good restructure to its cost, specifically in things like last mile.
So are you envisioning this mixed use space throughout a lot of the malls?
I think that plays a part of it, Karen, for sure. Yeah.
So the residential component, healthcare within these mini cities that are created, you're saying that you're seeing a lot of that landscape could be really changed towards those type of environments.
Towards mixed use that's inclusive of last mile fulfillment.
Okay.
I live part of my time in the far west suburbs of Chicago. I'm an hour outside the city. And when I see a single rented enterprise van show up to my neighbor's door to deliver a box that's 1 foot by 6 inches, I'm sure it's not an organ transplant delivery. So did it really have to be delivered on a Sunday morning? I just think we've gone so far in one direction. So
absolutely.
Yeah.
Absolutely. Anyone else like to talk about that? What they feel the future could look like? Where they want to reside one day?
I agree with that last statement. My major area of research is in supply chain and sustainability. So it drives me nuts when we have the balance between I need it like right now versus, you can comfortably get it, and then make a consolidated shipment. We're doing that at the university where, if you order a pencil, you're not going to deliver a pencil. This is our contract. So you're going to wait until we have a huge section of that campus that needs a lot of stuff. And then you're going to come, make deliveries. So I think that's important. And then the last thing I'll mention is on returns. Because we have this culture of e-commerce, we've noted a significant increase of people returning stuff because it's not the same experience as occupying a building and seeing what you want to buy. So the average return rate is about 25 to 30% of what you buy, which is incredible. So you have all this logistics going out, you get it, and now you got the logistics going back. And in most cases, that stuff unfortunately ends up in the landfill. So
Absolutely.
this is really a disturbing, uptick of business, which is convenient, but it's also having some negative ramifications as well.
Yes. How do we balance the sustainability and the instant gratification in society today? So excellent point. Huge concern about the expectations on that delivery. Let's see. It looks like we have a question here. Have you noticed significant HVAC upgrade activity for commercial real estate? And I believe, Dana, you started to touch on that earlier about the indoor air quality and what that looks like.
I haven't seen a wholesale replacement by investors. I'm seeing a little more the occupiers of real estate making that investment in their real estate, but I don't think the technology is quite proven yet. So it gets back to the basics again. Is your system that you have running efficiently? Are you maintaining it? Or do you have the right filtration in place? And then you get into some of the technology that's out there that it's quite expensive. And eventually it gets passed on to either the owner or the end user. So I'm not seeing a huge rush. There are instances where people are making some upgrades. I think as you plan for replacement, obviously that makes sense to when you upgrade to really consider with the appropriate professionals on the design side on what's gonna be good for now and plan for those what if scenarios. But I think that this has happened so quickly and a lot of technology is out there. It's in use in medical facilities, but does it translate to the office environment? Not always the case. So I think, again, getting back to basics, making sure what you have operates efficiently.
Yeah, we've experimented with it, which is a great place to do that at a university. But the new business school has geothermal, which is exciting. This happened prior to the pandemic, of course, but so far it's been proving to be pretty cool. And it's a large facility. So if you want to come take a peek at it, the person who asked the question, then we'll give you a tour.
There. And I think, thinking about the opportunities and what we learned in the 80s with the energy crisis and indoor air quality, was really closing down, any type of vents and really not allowing that air filtration coming in when just, the opposite, seems to be better is allowing more parts per million coming in, increasing our CFM, and really the validation of is all these investments that we're doing, are we really, killing, these viruses that are coming through the air vents, so where is that validation? And I think that that's what participants and occupants are definitely looking for. Okay. All right. I don't see any more questions from our chat. Let's see. A couple more coming through that we didn't cover. Okay. Well, this was extremely informative. Squeezed a lot in an hour. Any closing comments from anyone on the panel that you'd like to share that we didn't cover? Healthcare, I know, is another, seems to be a booming opportunity as well. That's taking off just across where I'm at. Just noticed a commercial building turned into now a healthcare facility with ambulatory care, outside of it, et cetera. So there seems to be, different types of real estate facilities that are opening up and, look, different type of space. So continue with the positive and, always look for the silver lining, everyone. So thank you.
Thank you.
Kathy, would you like to close for our panelists?
Thank you all for joining us today. This was a really, really great discussion. And I can't thank Karen for all of her hard work on this. And I want to thank Dr. Lyons, John, Ryan, and Dana also for joining us today. It's a topic I really wanted us to, ISM New Jersey, to get out to our members and all of our attendees today. And I thank you for your participation and for your dedication in helping us get this topic delivered today. Thank you very much, everybody.
Thank you. Have a great day, everyone.
Thanks,
Hey.
everyone.
Thank you.
Thank you.
Bye.
Happy Veterans Day.